Hello and welcome everyone to this week's COT review. I'm Thomas from COTbase.com, and today we're going to be looking at the 35th Commitments of Traders Report of 2020. Before I start the review, if you're new to COT analysis, then check out our website. We offer a lot of educational materials on the COT report. We also have some cool videos too, if you want to check those out, just to really understand the basics of this report. So back to the review, and starting off with the wheat market, which is on top of our list with a 21% change in commercials positions. Here we have that on the chart. You may see that over there. And if you compare the size to the past 52 weeks, you may see that although it is greater than average, but nothing too unusual. So nevertheless, it is a bearish COT change signal coming after several days, weeks of rally in this market, suggesting we may see a bit of a decline in the short term. Well, we'll see what happens. If we move on to the 5-year chart, you can see that we are more or less in between the two major extremes. So here we had the most bearish COT extreme in July of 2017, just at that top. And then a few months later, we had that beautiful bullish COT extreme in December of the same year. And as you may see, traders are more or less in between those two extremes. So there's not much from the COT extremes perspective that you can conclude. I wouldn't say this COT change signal to be that huge. So it's, I would say, a very quiet market from the COT report's perspective right now. So let's move our attention to lean hogs, where we have a 20% change in commercials positions. And back, of course, to the 1-year chart, you may see that on the chart itself. It is larger than average. It is bearish, similar to wheat, suggesting some weakness continuing, actually, because as you may see on Friday, we had a bit of a decline in this market. So the report suggests that we may see that continue on Monday, Tuesday, and Wednesday probably. If we jump back to the 5-year chart, you may see that we had that bearish COT extreme in April of last year, just near the top. We've moved away from those levels. We had some relative bullish extremes, but nothing exceptionally large as the one from July 2018 shows us. So we are, I would say again, the conclusion is we're more or less in between the two extremes. In relative terms, we might state, if we look only at the past, let's say 1 year, it's more bearish than bullish. We may see a bit of a decline. So, but again, I wouldn't consider lean hogs COT report to be that interesting right now. So moving on to corn, we have a 17% change over there in commercials positions. Here we go. And of course the 1-year chart, and there we have that 17% change. And you may see that is definitely amongst the largest changes in the past 1 year. We see smaller changes normally. This is a bit larger. We had a very similar change size last week, and of course you may see that after just a bit of a decline, the market went back into rally mode. So again, I think it's important to emphasize that these COT change signals do affect the market in the short run, but doesn't mean that just because we see that this weekend, this sudden change in traders' positions means that we're going to suddenly fall off the cliff and see prices declining. It just shows you the bias of these large traders in these markets. Moving on to the 5-year chart, you may see that we had that bullish COT extreme in this market during the June period. We have actually seen the market rise, but it actually initiated just a little bit later after that signal itself. And of course, we are far away from any significant bearish COT extreme. So I would consider this bullish extreme that was in the market for quite some time to be the major force right now in the market, suggesting some further strengthening in corn prices in the medium to long run. Moving our attention to large speculators COT extreme, we've still got the Euro market on top of our list with an all-time COT extreme in large speculators, and that's the case in commercials as well. And by the way, small speculators were there last week, if you remember my review from a week ago. So of course, it's quite obvious that we are talking about a bearish COT extreme signal. You may see what happened to the market after 2018. Early 2018, when we had that bearish extreme over there that coincided with the top. We have seen the past few weeks a halt in this rally. It's not continuing. Bearish stress levels are huge. Never seen such a bearish extreme in the COT history of euro. So that suggests we may expect some weakening in this market against the dollar. Now, actually, that's something that the dollar, the true US dollar index is showing us, but that's charts that we show to our subscribers. It's a special index that we created. So let's move our attention to the sugar market, where we have the 197 report extreme in large speculators. You may see that on the charts over there. The same exact extreme can be seen in commercials. And again, we are witnessing a bearish COT extreme signal. You may see the last bearish extreme signal was from February of this year. Just after that top, we've seen the market decline. We reached some sort of a bottom. We had a relative bullish extreme, not that large. You may see we had much greater extremes, but nevertheless, you may see stress levels were decreasing from those bearish levels as the market declined. And now we see that the case is the opposite. Now, of course, this can continue on for some weeks, month, and this September 2017 COT extreme situation shows you that there's plenty of space left for traders to increase their extremes, as you may see. So nevertheless, this is a bearish COT extreme, so that's something you should keep in mind if you are trading sugar. And last but not least, let's open coffee, where we have a 194 report extreme in large speculators, the same extreme in commercials. And again, we are witnessing a bearish COT extreme. You may see how well these COT extremes, these bearish extremes, are indicating shifts in the trend. Sometimes, you may need to wait a few weeks before the market reacts, but nevertheless, this is a bearish extreme already. So if you are trading this market, that's something you should keep in mind. That was all for this review. Of course, don't forget you can analyze much more at COT Base. We only show you a brief picture, a few markets, but you can, of course, analyze all the markets. And of course, analyze new COT report types, other data types, analyze specific data sets if you wish. You can go and do a more in-depth, detailed COT analysis by looking at multiple report changes on a defined look-back period. You can analyze the COT index, the MOVE index, use our wonderful long-term trend indicator. And of course, we also provided some volume and open interest analysis to our tool sets as well. I very much appreciate your attention. Thank you very much for being with me. I wish you a pleasant weekend. Take care. Goodbye.